Welcome to another episode of the Wealth Building Strategies Podcast. I'm your host, Jeremy Constantino. And today we're going to be starting a three-part series entitled How to Start Investing in a Commercial Real Estate. So since we've started this podcast, I've gotten a lot of questions asking me multiple items about commercial real estate. But obviously the most important one and the most I always get is, how do I get started investing in a commercial real estate? It seems that the majority of the listeners and the majority of my contacts and network, they already understand the value of investing into real estate, one, and then they obviously also see the perception of the reality is that commercial real estate is more lucrative. So my network already understands that. And they also understand that these commercial real estate investments can yield a higher return, a much higher return than in the stock market. You guys like that real estate is a physical asset with land and a building on top of it, as compared to the stock market, which seems like funny money. And you all see that the real estate market is much less volatile than the stock market. For example, this year, I still have some stock in my 401k, and I'm down 70, 60% in my stocks, which is a tremendous loss. And I know that a lot of our listeners have had these losses as well. And thus the inherent need and the demand for diversifying your investments into the real estate, especially commercial real estate. Also, the benefits of real estate, again, lower risk overall in general, and cash flow, as opposed to the small dividends that you may get in the stock market. In real estate, you can get some significant cash flow. Another benefit, tax benefits, the cost of segregation and the tax savings can be in the millions when diving into commercial real estate. And obviously the one that I like the most is forced appreciation by value add, increasing the NOI of a commercial real estate asset and doubly, tripling your value of the asset. So we all know that in getting into commercial real estate is extremely important to generating wealth and growing our wealth. However, first question is, how do you get started? How do you get started? So I have a three-part series here, and the way I answer this question on how to get started in commercial real estate, I answer it by three key decisions that one needs to make before actually investing in commercial real estate. So I've got three key decisions that you need to make. And I discuss these three key decisions in depth in my new ebook. So if you have not already downloaded my new ebook, it's called Diversifying Your Real Estate Investments. So in the show notes to this podcast, please click on the link to download your copy, to request your copy to be sent to you. It's Diversifying Your Real Estate Investments. I highly recommend you to read my book, and I go much more in depth regarding these three key decisions before you start investing in commercial real estate. Key decision number one that you need to make before getting into commercial real estate is, are you going to be an active investor, or are you going to be a passive investor? So what is an active investor? An active investor is one who's actively working to acquire, manage, and dispose of the real estate property, compared to a passive investor who is one who invests in real estate property but lets somebody else do all the work, spend all the time of acquiring and managing the property. Active versus passive. Now, you can make the decision to do both, and that's the path that I'm going. So it's not an either or, but for your first one, you got to actually make a decision on your first investment, and it can be, or it needs to be either or. So let's go ahead and get started into looking at both of these types of investors. So active investing. The benefit, obviously, of the most important benefit of actively investing is that the majority of the time you get to invest in a real estate asset by yourself, and so that you get all of the gains. You are the sole owner, as opposed, and of course you need to leverage the bank, or you can invest all cash sometimes. Regardless, you're the owner wholly, and therefore you get all the returns. That results in achieving a higher return on investment. So I have personally invested as an active investor on over 15 real estate investment deals myself. And my combined average of all those deals was 57% ROI. So that 57% ROI absolutely crushes anything that you can get in the stock market. And thus the reason why throughout since 2005 I've been investing actively primarily in real estate, and I've I've done quite well. Over 57% is the combined average of my 15 deals that I've done over the years. And in those deals, there's some that I've had 100, 200, and even 300% ROIs. Okay. So that's the benefit of investing actively. However, investing actively takes a significant amount of time and energy. So the majority of those deals, that the 15 deals, I actually worked while I had a full-time job with Chevron Oil and Gas. I spent a lot of my time after work going to going to the foreclosure auction, bidding on deals, spending hours after work fixing up properties, physically painting, doing a lot of the hard work myself. So when you're making this decision to do active versus passive, you got to realize that the more time that you spend, obviously you're gonna reap your rewards, and you're gonna have a high ROI. And the more that you peel back your involvement, somebody else has got to do the work, so you're gonna have to compensate them. So your ROI goes down as you start divvying up all the work. I've had a lot of people comment that active investing doesn't seem to be that time consuming, even if you had a property manager in place and a full team. But for example, I disagree with that. For example, my wife and I, we moved to Venezuela, and we lived in Venezuela for 3 years as expats with Chevron Oil and Gas. And we still had to manage our multifamily properties that we had in Louisiana that we owned. We had a great property manager. We had a realtor. He was a realtor as well. But even though he was still managing the property, we still had to make many decisions on repairs, larger renovations. Still had to have a lot of conversations with the property manager, had to manage our finances. And we even had our own CPA. We didn't do our taxes then, but we still had to organize the data and still give the CPA the data. And then obviously when we're ready to sell, we had to go visit the property, make final decisions on the repairs and anything for the make ready to be sale. So even though we had a full team in place with the realtor and the property manager, we still had to do a lot of the work while managing and while selling. And then even on the buy side, I had to make the decisions on the buy side by doing a lot of by searching for the properties, doing a lot of financial underwriting, evaluation, market analysis, and then obviously working with the bank to secure the loan. So a significant amount of time went into that our first multifamily property there in Louisiana. And it was a lot of work. It was a lot of work. And we went for it because we felt like we had the time. But for you making your first to jump into commercial real estate, you have to be aware that even with setting up a full team, it's still going to take time, and you need to make sure that you have that time. So let's look at passive investor now. So what is a passive investor again? A passive investor is one who invests in a real estate property, but let somebody completely do all the work from acquiring to managing and disposing. As a passive investor, you don't have to worry about searching and buying the property, managing the property managers, or dealing with the tenants and getting the property ready for sale. The biggest and the most important aspect of passive real estate investing is simply that you get to leverage the expertise of a solid operator that you get to partner with, who has the capability of achieving high IRRs in commercial real estate that you may not have the knowledge to do such. Even if you are experienced already in some aspects of commercial real estate, you may want to start diversifying into an asset class or a niche that you're not really an expertise in. So that's another benefit of being a passive investor, is that if maybe you're an expert in office space or retail space, but now you want to start investing into industrial warehouses, but you can maybe invest passively on the first couple deals with a solid operator that has significant experience in the industrial warehouse. And another aspect of passive investing is it's a good way to get into the commercial real estate market, which has a higher barrier to entry, a higher cost, where you're going to need 6-7 figures as just a down payment. And a lot of investors out there maybe starting out or even experienced maybe do not have that cash, and that's where you get to partner with other passive investors so you can come together and buy a larger property. So for example, my first passive investment was a storefront retail office building, and I literally did, the only work that I had to do was I literally only had to wire the money, and I had to sign the documents. Then over time, I would get mailed the checks. I actually got mailbox money, and I would have to deposit the checks into my bank account. Um, I only made 8% ROI on the deal, and that's the downside. But on the flip side, though, I was okay with that because my money was in a secure, solid physical asset, a real estate property that I knew was not going to devalue, and it was safe. And over time, I had it for many years. We recently sold it, and I got my money back. And it was a fantastic investment for what I was looking for. A no headache. I didn't want to have any thoughts at all on the investment and let somebody else manage everything. It was fantastic. I had a lower ROI on the deal, but it was still worth it. And in comparing, that was a handful of years ago. So now the investor portals that are out there for these passive investments are much more efficient, where you could just invest with a click of a button. The funds are direct deposited from your account into the funds account, and then over time they're direct deposited in your bank account. So the online investor portals make the process even easier now than it was for me whenever I actually had to wire the money myself, and it was a little bit harder work depositing the checks. Yeah, mailbox money, really hard there. So all of this is possible in passive investing and through what is called the real estate syndication. And you may already be familiar with this, but for those of you who are not, real estate syndication is just simply when multiple investors come together to fund the real estate acquisition and then partner with an operator who does all the work of the asset. So some key terms here to keep in mind: the investors can be called passive investors, silent investors, limited partners, or even LPs. You see that written a lot, LPs for short. The operator, the one who manages all, could also be called the sponsor, and they're called the general partner, or even GP. So those are some different names. They're all synonymous for the one who runs the project. The investors and the operator, they split ownership. So the LPs and the GPs, they split ownership of the property, and profits are split between the operator and the passive investors. So the one doing the hard work gets a share of the equity and the share of the profits, and that's how he's compensated. They're compensated. And the passive investors, they give up some equity, but it is worth it for the passive investors to leverage the expertise of a solid operator. So, in summary, the key questions that you need to ask yourself when you're wanting to start investing in commercial real estate. I have some questions for you. So one, how much time do you have to actively invest? You got to consider searching for the properties, underwriting deals, working with the banks to secure lending, overseeing construction, repairs, filling the units with tenants, overseeing the property management, getting the property ready for sale. So if you have the time and you're willing to commit to that, that may be what you're looking for. The second question that you need to ask yourself before getting into commercial real estate is how much knowledge and expertise do you have about investing in commercial real estate? So if you're thinking about getting into retail or office or hospitality, industrial, how much expertise do you have in that? And on your first deal, you could make a mistake that could cost you millions of dollars. So would it not be better to leverage an experienced operators for your case? It's a question that you have to answer. And if you feel like you have the expertise, that's great. Go for it. Third question, how much cash do you have available to invest in commercial real estate? Like I said earlier, there could be 6, 7 figures easy for down payments just to get into commercial real estate. On the active investing side, on the passive investing side, you can find passive deals, $25,000, $50,000 minimum buy-in for these real estate syndications. So, depending on the cash. So, at the end of the day, though, you may be in a position where you might want to do both active investing and passive investing, and that's exactly where I'm at in my career right now. Is I'm doing the majority of my work in active investing. However, I really, really like investing passively. I really like having my money go to an investment deal where I don't have to think, I don't have to worry about it, I don't have to work on it, and I just get a nice, solid, safe, secure investment on the return on the investment on the backside. So I like choosing both. I choose both. So you may choose both as well. But obviously, to start at one, you gotta make a decision on one first to start out passive or active. So again, in a lot of what I've been discussing is taken from my new ebook, Diversifying Your Real Estate Investments. So it's available now. So just click on the link in the show notes to request your copy. So I hope you enjoyed this discussion in this podcast talking about the key decision number one, getting into commercial real estate investing. Do you want to be an active investor or do you want to be a passive investor? So hit the subscribe button and the like button and follow me and stay tuned for the next podcast episode where we talk about the key decision number 2 when starting out in commercial real estate. Thank you for tuning in, and to the next time. Thanks.